All right, Adrian, we're live. Welcome to Proof of Thought podcast. Let's kick it off. Wanted to just do a quick overview of your background. What did you study in school, and where did that take you professionally initially?
Sure. So, like, if we want to go to the real boring aspect of it, I have a few degrees, but my focuses were in computer science, management information systems, sociology, and psychology, and then business analytics. I guess that's the broad, um, background that I have, and also some database management. I also have an associate's in database management, and my career started off with me. I mean, I've worked as a bouncer at a bar. I've worked as a few different things. I've been fortunate that I've gone into roles that I've been able to parlay into other roles. So what I mean by that is, when I was working as a recruiter, there was a heavy analytics component in the form of workforce analytics, and so I used that to get my first role as a junior analyst, and then as a HR analyst, and I moved into finance and into systems. I just kind of moved up the ranks, and eventually I got tired of that and decided to branch out, and I started doing more data focused work with regards to new system implementations. So the way that I can explain that in 10 seconds is that if you are a company that's on an older system and you're looking to migrate over to a new system, I'm the person that helps you in that migration. So that's what I do in my day job. And I've also branched out into doing some more dedicated AI work. And the best way I can describe that is AI readiness. So I work with clients to decipher and help them discover if they are even ready for onboarding AI tools. And those can be cloud based, like using ChatGPT, Claude, Gemini, or that can be through doing something more on prem, where they're looking to allocate capital towards getting systems and workstations that are powerful enough to run local LLMs, and then helping them assess whether or not they are ready for that process.
All right, makes sense. And now on to the really fun stuff. When did you stumble upon Bitcoin, and what moment made it clear to you that you should, take Bitcoin maybe as seriously as we should all take AI today, and maybe even also help others understand it as well?
So with Bitcoin, I actually heard about it very early. The first time I heard about it was end of 2010, beginning of 2011, if I had to if I remember correctly. I was living in St. Paul, Minnesota at the time, and I was walking to the gym, and I saw this guy I knew in college moving in. And I just kind of stopped and talked to him, and he was moving in a whole bunch of computing hardware. Like he was moving in servers, he was moving in racks, he was moving in, and I was like, what are you doing? And then he kind of said that he's mining something called Bitcoin. I thought it was a scam. Just that was my initial assessment of it. He tried to explain it to me. I kind of grasped it. I didn't really fully understand, but I kept seeing him periodically over the next like year and change. And what was funny is that one day on the way to the gym, I stopped and we just started talking. And he's like, "Look, this Bitcoin movement, I think is no." I said to him, "So what is the point of this?" And he said something to the effect of, Bitcoin is a belief system, Bitcoin is a movement, or something to that effect. And then I thought he was in a cult or something, right? At that point. But he then started explaining the technology to me. He started explaining mining to me. He started explaining all of that stuff. And then what really got me is that he went into monetary theory. So I guess you can say this is the gentleman that orange pilled me, right? He was a computer science major. He did his master's in differential equations and spatial geometry, or something wild like that, right? So he was very, very intelligent. He was a very savvy, knowledgeable individual, and he broke it down to me from a systems aspect. He broke it down to me from a economic theory aspect, and then he broke it down for me for like, well, so now that I have systems economic theory, here's what Bitcoin mining is. And we talked for about 2 hours, and gradually, I kept seeing him. We kept having these conversations, and the first Bitcoin I actually owned were mined. He set everything up for me. Um, I actually bought my first Bitcoin off of him. He sent it to my first, like he kind of walked me through the entire process, right? And since then, I've made every stupid mistake you can imagine when it comes to Bitcoin. Um, but what kept me in it is, ironically enough, after I made the foolish decision to sell some Bitcoin early and I saw the run up, that was my final moment in terms of, okay, this is legit, and also my biggest moment of regret because I saw what I had and then what I could have had. And ever since then, I've been in it. And so I guess you can say that what brought me to Bitcoin was promise and peril. Peril in the sense of, damn, I sold. Promise in the sense of, well, I still have some left. So I'm going to hold on to this for dear life. And I've been neck deep in it ever since.
Wonderful. And you've become one of the more prominent voices around MicroStrategy, especially on X. And for those who don't know, of course, MicroStrategy is the company to pioneer putting Bitcoin on their corporate balance sheet. And the company has essentially blossomed ever since then, since 2020. So I'm curious for you, as you sort of started thinking about MicroStrategy and what could happen in the corporate domain, when and why did you become a MicroStrategy investor? And were you initially like, hey, this is Bitcoin 2x, and therefore I'm selling all my Bitcoin to buy this? Or was there a different way you sort of thought about and approach allocating between your MicroStrategy and Bitcoin?
So, when I first heard about strategy well, when it was MicroStrategy, now it's strategy. When I first heard about it, I didn't think much of it, quite frankly. So in 2020, what did we have going on? We had the COVID situation, right? We had the COVID crash. Bitcoin crashed, and all of a sudden it started running back up. All coins were running wild. You can basically close your eyes and throw a dart at a board and make money, right? That was what I knew as alt season, right? That's what I experienced as alt season, and I was still in the alts at the time, and I was rotating out of alts and taking those profits into Bitcoin. But I say that all to say this: I opened up a position in strategy at the time. Again, didn't think anything of it, and I sold and I made some profit, but I thought of it initially as, this is a cool idea. They're going to have it, that it's going to become more valuable, but I didn't really think through what that meant in terms of potential returns and in terms of potential dynamics it can create. But as I started seeing, Saylor on all of the podcasts, like he went on a tear for like a year and a half, 2 years, where he was on every podcast, right? And I heard him talk about Bitcoin, and what I actually saw, and this is just my own personal opinion, is I saw his understanding of Bitcoin and his perception of Bitcoin kind of do this. I think he had a very general, high level understanding of what Bitcoin was, and he probably had a very deep understanding of what Bitcoin was from a technology standpoint, from what it meant from a finance standpoint. But I think the philosophy and the overall thesis of Bitcoin for him, I saw it take a steep curve upwards. And that's what got me looking into it even more, right? And you had some early individuals that were talking about it, like very early individuals. Dylan LeClaire was one of them, a handful of others. And I said, I'm not selling Bitcoin to buy this. I have capital to allocate towards it. But is this something that I want to allocate capital to in size? So I put some capital towards it, saw some ups and downs. But in 2023, that's when I became very, very aggressive because I really steeped myself into what strategy can be. And that required me, taking my Bitcoiner hat off and putting my financial analyst hat on. So I had to start looking at it from as weird as it sounds to say, from a TradFi aspect, and had to start understanding, well, what does this mean from an aspect of a corporation that is buying Bitcoin and putting it on their balance sheet. And that's when I got very aggressive in my positioning. So I leveraged my Bitcoin, I bought strategy, and the rest is history. It's worked out very, very well. So my understanding of strategy kind of evolved as I saw Michael Saylor talk more about it, and as I really started digging into what it really meant for a corporation to have Bitcoin on their balance sheet.
And of course, Bitcoin Treasury companies now in 2025 have become the hottest thing in town. It seems that there's a new one each day, goes up 30, 40, 50%, and just continues to climb after that. I think it's easy for people to sort of want to FOMO into these things. How do you maintain discipline and focus on your own bets, especially being so active on X, seeing BTC Treasury announcements every day and the crazy gains that people are making? How do you stay disciplined and focus on what you're doing and your plan?
Well, as many people in True North say, so Ben Workman, myself, others, we have said something that investment is not a team sport, and your losses are not public information either, right? So what that means is you have to take your bets, take your losses, and you have to own them. Now, with that said, tuition in this school is very, very expensive, and I've learned the expensive lessons. If I had the Bitcoin that I started with now, you probably wouldn't even know who the hell I am, just being honest, right? So I've learned those expensive, painful. I shouldn't have sold. I should have bought. I shouldn't have chased this. I should have stayed in this. There's only one way to learn, that's through experience. So I've actually had those experiences, and that kind of guides what I'm doing now. Whether I'm talking about options, whether I'm talking about investments, whether I'm talking about everything. And I say that as a framework for this. The way I keep focused is I keep the main thing the main thing. Bitcoin is the main thing. Without Bitcoin, all of these plays, strategy, Semler, whatever, would be defunct in terms of an investment thesis in my mind. I think I'm not seeing anything controversial there. I think the corporations that have adopted this strategy acknowledge that. And they acknowledge the fact that Bitcoin is a new trend that is growing. It is a new asset that is growing. It is a new asset that is pristine. It's, indivisible. It's infinitely transferable. We have all the talking points that we're aware of, right? I don't need to go over them. So, with that said, I keep Bitcoin untouched. I've leveraged Bitcoin in the past, and by leverage, I mean I've taken like loans against it and whatnot to invest in strategy. And I'm taking the kind of a similar approach with this. Any capital that I allocate is a percentage of my holdings. And what you're doing with that is you have to take a very investment agnostic, kind of stoic approach to what it is you're doing. If your investment thesis, or rather my investment thesis, is centered around Bitcoin, I do not put that at risk. If my other primary investment is tied to strategy, I do not put that at risk. So if I do not put my Bitcoin at risk and now I do not put my strategy at risk, how do I do that? Is that I'm taking out a percentage in the form of leverage, and I'm investing into these other plays, and I'm doing it with small percentages. I'm allocating new capital in small percentages. And even though I'm going further on the risk curve, I'm keeping my relative risk low. Now, with that said, I am not chasing the rabbit, as I like to call it. Every new company that comes out, I'm not chasing them. One good example of that is Metaplanet. I could have gotten into Metaplanet much, much earlier. There are a lot of people that got into Metaplanet much, much earlier, but I didn't get into Metaplanet until I was confident that I had fully vetted the thesis and I had fully understood all the market dynamics that are in play. I scaled into it over time, and now I have a larger position, and I am comfortable with that. Some of the other plays, I have positions in them as well. I won't get into all of that right here. But the best advice I can give to someone is that if you are trying to chase gains or chase the rabbit, you have to be aware that things can get away from you and you have to make decisions dispassionately. If you're frustrated with one investment and you're rotating into another, I don't know if that's being dispassionate. However, if you're looking at the returns that you've seen very, very methodically, and you're saying these are not the gains that I want, and then you're making an informed decision to rotate into something else, and you're prepared to take those losses as well as those gains, then more power to you. But that's just my approach, and that's just how I handle things.
And in terms of portfolio construction, and you were hitting on this a little bit, your main pile is Bitcoin. You might have another main pile that's strategy, and then some other plays. How do you think about though diversification versus concentration into these BTC Treasury companies? I know OwnB, for example, with Bitwise, right? One could just buy a whole basket of these things, and that is done very well. And I believe it will likely continue to do all right because you have this diversified portfolio of these things. But how do you think about that personally?
Well, so what's ironic about all of these plays is one way or another, it's a Bitcoin play. It is either Bitcoin or it is a directional bet on Bitcoin, right? So you're not necessarily diversified in the traditional sense. So you need to take an approach, or rather, in my opinion, you need to take an approach that this is a new 60-40 portfolio. You have Bitcoin at whatever allocation you're comfortable with, or whatever allocation that you want it to be. Then you need to assess what of these other plays, what of these other directional bets on Bitcoin are the best bets. And some people are comfortable with a 60-40 allocation. Some people are comfortable with an 80-20 allocation. What I'm doing is, since I'm not touching my Bitcoin and I'm leveraging my Bitcoin, as I add more to my Bitcoin and as I, take out, for instance, potentially, and this is not financial advice to anyone watching this, as I'm as I take out a loan or something against my Bitcoin allocation is not changing, right? The only thing that's happening is that I am leveraging it. So, and I'm comfortable doing that because I have several income streams that are coming in. So I can handle market gyrations, I can handle drawdowns, and I'm by no means over leveraged. So I'm doing that. And what's happening with my particular positions is that the pie isn't shifting, the pie is just expanding. So I have the Bitcoin allocation and it's expanding in strategy, it's expanding in Metaplanet, it's expanding in other things. So from my perspective, it is not necessarily a 60-40 portfolio. It is a adaptive Bitcoin portfolio. So Bitcoin remains the lion's share of my holdings, and I'm very, very methodically leveraging that to grow my other holdings. Just like, you can think of strategy as leveraging their balance sheet and leveraging their ability to raise capital to allocate more to grow more Bitcoin. I'm using my Bitcoin to expand into these other positions. But eventually, I'm not going to hold all of them. I'm going to sell some of these positions and put it back into Bitcoin. Will I hold strategy long term? Likely yes. Will I hold Metaplanet long term? Remains to be seen. And some of these other plays, who knows where they can go. But as of right now, coming back to my earlier point, the main thing is the main thing. I'm trying to accumulate Bitcoin as quickly as possible. And of all of my holdings, I have no qualms about allocating resources and capital towards Bitcoin, which is why I'm leveraging it, but I'm not selling it. I hope that answered your question.
No, no, that definitely makes sense. And wanted to dive a little bit deeper into Metaplanet. You mentioned, and I liked your approach there in terms of really taking the time to understand it for yourself before making a sizable allocation to it. As we know, Metaplanet did something like, I think it was like a 35x last year and was one of the best performing stocks in the world. It's already up another 5x this year. Why do you think the company is still in its early days? Can you make the case for that?
Well, you'll have to take a look at Metaplanet before and after Bitcoin. So, in terms of their of it being early, I think you can say that they're early because they're early in their Bitcoin journey. Where strategy was between August 2020 and August 2021 is not where they are now, right? And if you take a look at Metaplanet, you can say that they're still within the first year and change of this journey that they're on, or first year. I can't recall exactly when they adopted the strategy exactly, but they are in the nascent stages of a Bitcoin treasury strategy, right? So that is one way we are early. Another way we are early is that we still have to see long term how the market reacts to it. Right now, in the Japanese market, they have a few things that are working to their advantage. I think that some of those are social in the form of the Japanese market. Some of them are purely economic in the sense that the Japanese market has inflation costs, inflation rising, cost of living rising, things of that nature. They also have some benefits in the form of how the Japanese stock market exists. The Japanese stock exchange exists in the sense that their circuit breakers are far more aggressive than the circuit breakers that exist in the U.S., at least from my perspective. So if it runs up too much, they stop trading. If it runs down too much, they stop trading. And then they have the moving strike warrants where they're taking more of a sell into strength approach. Oh, and the other point I didn't mention, there's not easy exposure for many investors in the Japanese market to Bitcoin. So this is serving as a vehicle for that as well. There are a lot of differences in what Metaplanet is dealing with in terms of how they can scale this treasury plan that makes them interesting. There are all kinds of aspects that make Metaplanet a different play as it stands right now than strategy that made it interesting to me. And those are all the ways I think that we're early. We still need to see how those are going to play out over time, right? We still need to see that is Metaplanet going to become, some people like to use this analogy, are they going to become the strategy of Japan, right? In a very, very simple way. Possibly, I don't know. What I do know is that all of these auxiliary plays, whether it be strategy, whether it be Metaplanet, whether it be whatever, for me, speaking for myself, are all a directional bet on Bitcoin. So if I am interested in the fact that Metaplanet has all these unique dynamics at play, and I think that they can be a better directional bet for me to add to a position versus me saying, oh, is it Metaplanet or strategy? I can say it's a better bet for me to have Metaplanet and strategy instead of taking a one or the other approach, right? That's the way I see it. And that's how I think that we are so early, because they're very early in the strategy. We still need to see long term how these other dynamics play out. And I think that Dylan and Simon and the team at Metaplanet have a very, very, um, for lack of a better term, vision overall. And I do think that they have a chance to do something really, really disruptive. Now, how that plays out long term remains to be seen.
Well said. Well said. I'm gonna leave it at that. As we know, the Bitcoin cycles, and we'll see what happens with Treasury companies. But Bitcoin cycle Bitcoin typically runs in cycles. And I think you've coined this term surge protector. I was wondering, there's some other terms out there. Can you explain the concept of volatility shield, shock absorber, or what you call the surge protector? What does all that mean in terms of market cycles when it comes to Bitcoin?
Well, so my surge protector is slightly different. So let's try to break them down. So whether you have a volatility shield or whether you have another analogy for it, what essentially it's saying is that these treasury companies, as it stands right now, they are accumulating Bitcoin. So simply put, the Bitcoin exists on their balance sheet, the equity sits on top of Bitcoin. So what does that mean from a structural standpoint? What that means is if you take a look at a company as a capital stack, or you take a look at a company as a functioning organism, whichever analogy or view you want to take, if there is a shock, the equity is going to absorb that shock before the Bitcoin will. And why is that? They are putting an asset on their balance sheet, and if someone decides to short the stock, they're shorting the stock, they're not shorting Bitcoin. And how does that play into broader market dynamics? And this is just my assessment of it. Bitcoin operates in cycles for two primary reasons. I call it capital rotation and liquidity. You have to break into capital rotation and liquidity. The capital rotation is that typically the cycles follow this pattern. People get into Bitcoin, Bitcoin runs up, they leave Bitcoin, they go into altcoins, altcoins outperform, the capital rotates out of the market, and then everything crashes. Everything isn't crashing necessarily, in my view, because of a inherent flaw or an inherent natural ebb and flow that Bitcoin must follow. I think is that the capital and liquidity are going into Bitcoin, and then it's just following Bitcoin, altcoins, exit. Everything collapses. People say, "Oh no, it's all over again," and then they come back over again when the halving cycle comes in and the scarcity kicks in and becomes more scarce, and then there's more liquidity, and then it kicks up again. And I think that because the halving operates on 4-year cycles, that feeds into this natural ebb and flow. But that does not mean that Bitcoin must follow that ebb and flow. There will be a follow of liquidity. There will be some impact of the halving cycles, but there's nothing that says it must be boom bust, right? In my view. Now, what does that mean for these treasury companies? As it stands right now, what we're seeing is a shift, in my view, in how the cycle is operating. At this point, we would have seen a much, much larger run up in the altcoins, but we haven't seen that yet. Why? One, because there's too many of them. There's not enough liquidity to really foster a really, really aggressive trajectory uptick in any one of the altcoins right now, because we went from hundreds to thousands to tens of thousands. Now we have hundreds of thousands. Whether or not a particular protocol is good or bad, I think that's at this point is irrelevant. The fact of the matter is, how is that one protocol going to stand out? How is it going to differentiate in a economy now that went from hundreds to hundreds of thousands? There's too much dilution and attention. And whether people want to admit or not, what makes altcoins run and what makes Bitcoin run, in a lot of time, is sentiment, is perception, and it's hype, right? There's not enough hype to go around. So I think that what's happening right now with these treasury companies is that Bitcoin has fundamentally shifted the perception of this overall market, and I think we have strategy to thank for that. Because of what strategy did last cycle, we're now seeing the effects of that this cycle. We have Semler Scientific, we have Metaplanet, we have all these other companies that are now doing this strategy. And because of that, they are taking more Bitcoin off of what I like to call the casino. What it used to be a casino, now it's operating more as a structured economy. They're taking Bitcoin, they're putting on their balance sheet, and they're disincentivized to sell. Why would they sell the very thing that is going to give them the multiple on their equity and allow them to grow? There's no incentive to do that. So then, therefore, where's the capital rotation coming from? IBIT is accumulating Bitcoin because people have interest in IBIT and people are buying IBIT, and therefore they're accumulating more Bitcoin. IBIT is not going to rotate into Fartcoin or into Pepe or into something like that. It is an entirely different investor base, right? Retail isn't here yet. Retail has not been moving this. It's been institutions and it's been corporations. So because of that difference in investor profile and because of that difference in market dynamics and because of that difference in Bitcoin's perception, we now have a fundamentally, in my view, different kind of cycle that's playing out where all of the players are disincentivized to leave. So when you have something happening where the Bitcoin is being accumulated and there's no incentive to rotate because the outsized return they're hoping to see is going to be on the common equity. The reason why I say surge protector is because if there is a surge in the market in the form of a significant downturn, these companies, what's going to happen is that surge is going to be absorbed by the equity, and it's not going to flow down to Bitcoin directly and lead to an explosion in the form of capital being released and them selling Bitcoin. The equities can absorb a lot of that damage. And we've already seen, if we use strategy as an example, they've absorbed a lot of damage in the form of drawdowns, right? Because in 2022, they were taking hits. Everyone was saying Slater was going to get liquidated, right? The equity was absorbing all of that. And because it's an equity, they have all kinds of levers that do not exist in the form of either a VC pumping and dumping a particular altcoin or some degen in his basement. They don't have ATM equity offerings. They don't have convertible bonds. They don't have the strength of an entire operating business to absorb all that damage in the form of sell-offs, in the form of market drawdowns, in the form of other sentiment shifts. So instead of Bitcoin either taking all of that abuse when the market, for lack of a better term, when the market downturns, the equity is taking it. And that's why I say surge protector. A surge protector prevents your system from blowing out if there's a rapid shift in voltage, right? Very, very simply. Any rapid shift in voltage is going to be absorbed by the equity, and then it's going to dissipate. The Bitcoin remains, so the circuit remains intact while all the surge has been absorbed by the equity. And that's why I use a surge protector analogy. So, long story short, if I had to break it down into a few pieces, the capital rotation out of the market is now relatively disincentivized. Without a capital rotation out of the market, the equity itself, the commodity itself, Bitcoin, is going to see more growth and it's going to see more accretion. The equity will absorb more damage or more of the damage in the form of market exits than Bitcoin will. That is a different model for the cycle, and that's why I think this cycle looks different.
So do you see a scenario where Bitcoin doesn't then have its typical bust part of the cycle, but the equities, so strategy, Metaplanet, these other companies do have this significant downturn? Is that what you're sort of describing here? Or
So if you take that analogy, the equity is going to absorb more of the downturn than Bitcoin will. So when you have strategy, and if we just really think this through, we have IBIT that has hundreds of thousands of Bitcoin. We have strategy that has hundreds of thousands of Bitcoin. We have Semler, we have Metaplanet with thousands of Bitcoin. Then we have the regular holders. We have the regular, Bitcoin degens that are never going to sell. Then we have the fact that there's a reduced supply from lost coins, right? We have the fact that there's now a reduced supply being issued because of the halving, and that is being bought up. What that means is when sentiment shifts, whether that be through macroeconomic conditions, whether that be through sentiment, whether it be through whatever, I think that in my analogy, in my thesis, a lot of the downturn is going to be seen in the form of the equity that sits on top of Bitcoin versus individuals rapidly selling Bitcoin. we're always going to have sellers. But remember, in my thesis, and I think this bears out, the reason why the downturn has been so sharp is not because Bitcoin has lost its momentum. It's because Bitcoin hits a certain point and people are rotating into altcoins that then take it further. So the sentiment for Bitcoin remains, and then the sentiment for altcoins run. So if you notice, when alt season happens, does Bitcoin drop from 70K to 20K? No. Bitcoin stays at a pretty healthy price point, and then the altcoins start running. That's because of the capital rotation, right? So if that capital rotation isn't happening and the capital is staying within the Bitcoin network, Bitcoin's drawdown, in my view, will be less sharp than the drawdown from the equities, because the equity will absorb that drawdown if it were to happen. But even then, do I see an 80% drawdown in either Bitcoin or 80% drawdown in some of these equities whenever this particular cycle plays out? I'm not sure. And I think that even if we do see a drawdown, it might be somewhat muted because, again, the market participants are disincentivized to sell, and the largest holders are disincentivized to sell. And that by itself can shift sentiment. So if there's no massive selling taking place, that drawdown will be more shallow. So could we still see 30 to 40%? Sure. Do I think we see 80%? No.
Yeah, no, it makes sense. And just taking it a bit further, if we were just imagine a scenario where the equity does drop pretty significantly while BTC remains minimally impacted, as you were describing, wouldn't that cause the equities, to trade at a lower premium and maybe even a low premium? And if that's the case, do you think that will lead investors to then start buying up these equities again, which would sort of restart the cycle earlier than normal? Or if the MNAV falls below 1 for these companies, Saylor has talked about even buying back his own shares to support the stock. So how do you think that could sort of play out?
Well, if we let's call MNAV for what it is. MNAV is a sentiment indicator. So it's point in time. So I don't think that companies, in my view, should be making decisions based on a point in time sentiment indicator. And I say that because if we think of it in terms of market dynamics, you can have a stock running as hot as possible, and the MNAV can be 5, 6, 7, 8, whatever. And then if the right, or rather wrong, news event happens, you will see sentiment shift very, very quickly. Right? So making decisions based on MNAV, I don't think is going to be the best bet. Now, I say that to say this: if the equities draw down and sentiment shifts and people start buying them back up again, is that another kind of cycle? Yes. I think that what we can see with some of these equities is that the equities operate, and this is not me calling them altcoins, but I think the equities will operate as altcoins. And what you'll see is the drawdowns in altcoins, equities, could be more severe than the drawdown in Bitcoin, which is usually what plays out. If Bitcoin drops 20%, altcoins drop 40 or 50. Now, does that mean saying these are bad investments? No. What I'm saying is these are directional bets on Bitcoin. Therefore, if they see a multiple to the upside, they're going to see a multiple to the downside. It stands to reason. And that multiple to the downside will lead to the normal talk about, oh, this company's over, oh, this company's going to get liquidated, oh, this company needs to sell. Then it's going to dissipate, and the companies that remain are going to benefit disproportionately from when sentiment shifts again. Another halving cycle comes, Bitcoin becomes more scarce, there's less Bitcoin issued. You still have strategy buying, you still have similar buying, you still have Metaplanet buying, you still have the new entrants coming into the market. BlackRock's not going to sell all their Bitcoin. They're not going to just sit by and watch all their clients leave and say we no longer want it. The Fidelity's not going to do that. You have players that are incentivized to stay. So the ones that stay, the ones that weather that storm, will then see the uptick come again. And as liquidity comes back in, sentiment shifts, macroeconomic dynamic shift, it'll go back up again. So what we're seeing is a shift. We're just seeing a shift. I think that's what's happening. And I think right now Bitcoin dominance is probably going to go up. And I think Bitcoin is going to become the primary narrative. And we're going to be the primary narrative either in direct holding, either through exposure from IBIT, or either through these leverage plays. And if I were a betting man, I don't really see where Bitcoin experiences that 80% sell off that it usually sees. Again, that sell off is due to liquidity changing, and that is due to capital rotation. If we mute the impact of that capital rotation somewhat, and even if that capital rotation does happen, remember in this dynamic we're talking about, the equity is absorbing most of that capital rotation, not Bitcoin. So that is why I think things change. Now, the real question is which one of these companies are going to survive, and I'm not going to get into all that. But we're going to have it's just the law of averages. It's just how business works. We're going to have companies that may fail, and we're going to have companies that succeed. Some of these failures may become acquisition targets just because of the Bitcoin that they hold. And even if, let's use the doomsday scenario that one or two of these things fail and they have to start selling their Bitcoin, I want to remind people, well, and some people may not be aware of this, and if they're not aware of this, this will be new for them. And if they are aware of this, I'm reminding them. Last cycle, we had mining pools like F2 pool dumping 10, 15, 20,000 Bitcoin at a time. We in the whole rehypothecation bubble, as I call it, Bitcoin was getting dumped on exchanges by the thousands, and it crashed. Right? We saw what happened there. That is not going to be the same kind of outcome here, even if one of these companies fail. So it's going to be a blip. It's not going to be as disruptive as what we saw in previous cycles when it comes to a sell-off and in terms of a drawdown. So I think that things are going to play out differently. Granted, we have the macroeconomic environment to take into account, and if something wild happens there, all bets are off. But that's for everything. That's not just for Bitcoin. So outside of that, potential black swan event, I think that this cycle is going to play out very, very differently.
Wonderful, wonderful, and we will see a lot of interesting points there in terms of institutions now being or being the primary buyers this cycle. We may not see this massive drawdown that we've seen in previous ones, and you always have to ask yourself, and then what? So then, how does that shift market dynamics and how things play into the next cycle? So a lot to see there. One thing that people are anticipating as it relates to strategy for this cycle is the potential S&P 500 inclusion. I was wondering if you could touch on this briefly, if you can sort of break down the potential path for MSTR to even be included in the S&P, and maybe focus a little bit more on the positive earnings criteria, since that's sort of their main hurdle for them at this point.
Yeah, so very simply, if Bitcoin stays above 96,000, 97,000, something like that, it'll allow strategy to essentially wipe out or cancel out the last 4 quarters of negative earnings, which will make them eligible for the S&P 500. Now, does that guarantee inclusion? No. This is not something like the NASDAQ 100 or any other of the other indices that they got included in. The S&P 500, I think, has a little bit more politics involved, and inclusion isn't a foregone conclusion. But if it is included, I think the best way to look at it is in terms of perception. Again, I know I keep talking about perception and sentiment, but they really are two very, very powerful things in all this. In terms of perception and in terms of sentiment, I think that is significant. A leveraged Bitcoin equity, a Bitcoin Treasury company of that scale existing in the S&P 500 opens it up to all kinds of passive flows. It opens it up to much broader exposure in terms of news and sentiment and perception. It opens up the door to the world seeing Bitcoin fundamentally in a different way. I'm not saying that it legitimizes Bitcoin, because in my view, Bitcoin's already been legitimized. What I am saying, though, is if a company goes from 1 billion market cap to over 100 billion and then gets into the S&P 500 in the course of 5 years because of this strategy that they've undertaken, I think that's a very significant statement. I think it says to the world, it says to the market, TradFi market specifically, you've missed something here. Because if other companies had done what strategy did, they would have seen the same kind of multiples, right? Imagine if, just 20 companies, when Saylor made the decision to do what he had decided to take on this kind of a model and decided to, execute in a similar way, they would have seen a very disproportionate return of growth in the form of their share price, in the form of their market cap, and Lord knows where they would be now, right? That's what I think is important in terms of inclusion. It's perception, it's sentiment, it's what it signals to the market and it signals to the world about Bitcoin. Now, that said, strategy doesn't need inclusion. If strategy isn't included, I don't care. Just being honest. They're still going to do what they're doing. Saylor and this team at Strategy has still built up an economy, in my view, is what they're doing. They have the common stock. They have the three offerings that exist on top of it in Strike, Strife, and Stride. They're going to be scaling out those offerings. They're going to be scaling out this economy that they're building, and they're going to still be able to execute on this plan with or without S&P 500 inclusion. So while it is a amazing benchmark and it's an amazing milestone, I don't think by any means it's a prerequisite for strategy success. I think strategy success has been proven, and I think it's a foregone conclusion at this point. So for all of those thinking that it is a necessity, I would say no. It's more of a nice to have. It's more of a statement if strategy gets included and when strategy gets included into the S&P 500.
And as you touched on, as perception and sentiment continues to shift and grow, especially in the TradFi world, I think we're going to continue to see more BTC Treasury companies come onto the scene, and with that, the industry as a whole expanding. I'm curious, in this new economy, what new jobs or roles do you think will be needed, or will the team stay lean and mean by nature of the business model?
Well, I do think they would say lean and mean. And, in regards to what roles will be needed, I can't really speculate on that too much because in my personal view, I think that for companies to succeed in this, they're going to require a fundamental reworking of what it is they're doing and thinking to go forward. They're going to need to think about things from a social standpoint. They're going to need to think about things from a technology standpoint. They're going to need to think about things from a network standpoint, and then they're going to need to think about things from a commodities-based financial understanding in traditional markets. Right? It's going to require a very blended approach. So, what kind of roles exist in that kind of a world? I'm not sure of yet, but I can just say that they'll probably fill those needs. Is likely the most feasible outcome that I can see. They're going to need to have blended roles with a blended understanding, roles that are not really TradFi focused, because if we take a look at what's been happening, these companies know how to raise money, right? Already. I don't think that the focus should necessarily be on the finance side. I think the focus should be on everything else. And I think that's going to become more apparent because, as I mentioned with sentiment and perception, Bitcoin is a sentiment driven equity, or sorry, Bitcoin is a sentiment driven commodity, and these equities that exist on top of them are essentially going to become, in a lot of ways, sentiment driven equities until things stabilize and Bitcoin becomes a mainstay, a hard and fast mainstay in the global economy. So, with that said, a lot of the focus should be on the network effects, the social effects, the different market dynamics, how you can react to them, how you can act in them, and the different economic models that can, foster. That is the best way I can answer the question. I don't know if there's going to be a set role. I think there's going to be blended roles, and I think that people are going to have to wear many hats in order for this for the companies to be successful.
Okay. And of course, you've been successful in your own right on the social side. I'm curious, why do you think you've been able to experience such a good amount of success at becoming one of the top public X commentators on strategy and now other BTC treasury companies?
Some of it has been consistency. So I've been on Twitter for since 2009, and I've actually been in the Bitcoin space on Twitter for quite some time. I've just been on it under different usernames and handles. So this is the first time that I've been really publicly facing, and I think that because of my coverage on strategy, because of my commentary on Bitcoin, and because of my commentary on like technology and other things, that's allowed me to grow my following rather organically over time. And some of that is the fact that even during like the bear market, and even during the market downturns, I was present. I've covered a variety of things. I've covered everything from Bitcoin mining to Bitcoin equities to AI to quantum computing. I've just shown myself to be, I guess, what people call a thought leader in a variety of different areas, and I think that's allowed me to have a rather diverse group of people that have taken interest in some of my thoughts, and I think that's helped. That's the best way I can describe it. Also, I think that some people resonate with the facts, and you know, sorry if you have to edit this out, but when push comes to shove, I'm more of a person that doesn't really give a shit what people think. So I'm inclined to say what my thoughts are, and I think some people resonate with that as well. So all of that's kind of coalesced into giving my voice some weight in the space is the best way I can think of it.
Okay. And is there any advice you'd have for anyone who, would want to learn from your success and potentially follow in your footsteps?
Oh, I mean, if you want to try to become, actually, you know what? Here's what I would say. Don't try to become anything, just be yourself. Now, it sounds corny, but hear me out. The reason why I say be yourself is that if you can find a way to share your voice in a unique way, so share who you are, but do so uniquely, I think that is the best way to have success. You have a lot of people, I'm not going to say any names or anything like that, but I think if people go online, they can tell that there's certain individuals that are just taking what's a hot talking point and running with it, and other individuals that are realizing it's a hot talking point but putting their own spin on it, right? And you can very easily separate the wheat from the chaff that way. And I think that the best way for anyone to experience success is going to be sharing their voice uniquely. And with that, also, consistency is another factor. I would say, as well as consistency, doing things in a manner that is relatively high quality. That's one of the other things as well. If you're going to put something out, if you're going to put out a post, if you're going to put out a video, if you're going to put out some form of long form content, take pride in it. And over time, that will reward you in the form of, increased interest, increased follower count if that's what you're interested in, and increased exposure. I think that's the best advice I can give. Be authentic, be be yourself, and express that in a unique way, and take pride in what you put out into the world. And I think that will lead to success.
Love it. I really like that unique piece as well. That's very important there. All right, Adrian, we've been going through quite a bit here. I want to hit you with some rapid fire before we close. So, what are your Q3, Q4 BTC expectations and why?
I think that we're going to go, higher. I don't think, I'm not sure we're going to hit 444,000. I think there's far too much liquidity that needs to come into the market for that to happen. I mean, I've had fun with that, but I've had fun with those posts, but I don't think it's realistic. I think liquidity is going to come back into the markets. I think that once we have some more certainty around tariffs, I think once we have some more certainty around interest rates, we should see some upside momentum. I'm not going to give like a particular price point. I mean, if we follow previous cycles, ironically enough, that does put us close to 400,000. But I think it's more likely that what we're going to see is a gradual grind of Bitcoin up into higher numbers over time with more shallow drawdowns. That's the best way I can explain it. And for this year, Q3, Q4, as I said, liquidity cooperates, tariff uncertainty cooperates, interest rates cooperate. We should definitely see a run into the end of the year. That's the best guess I can give.
Yeah, personally, the main catalyst I'm watching are interest rates, what happens there. Obviously, that brings liquidity to the market. And then I think what you were saying about not seeing a typical cycle where we see this big bust at the end necessarily. And then also the fact that we have all these institutions that have been buying and they're disincentivized to sell. maybe that's what ultimately gets us to the 444, and it's a grind after we have this surge. But yeah, we'll see if that happens in 2025. But
Oh,
at this
we're gonna get to 400,000 at some point, right? I just
yeah,
don't know if it's gonna be this year.
right, right. What
So,
people typically
um,
do this cycle, right?
yeah.
So yeah,
Well, and also, does the cycle break is another consideration because if we have drawdowns, so a thought I have is the cycle broken if we only see a 40 to 50% drawdown instead of 80? Does that invalidate the cycle, or does that just shift the cycle? It's something to consider. So I don't know if the cycle is broken. I just think the cycle could be changing.
right, right. And some may even make the case that the asset's just maturing as well, and so that's why you're seeing 40% instead of 80% as well. But it's going to be very interesting. So what do you think is the biggest misunderstanding about Bitcoin today?
I think that, again, without calling any particular company or person or talking point out, I think the biggest misconception about Bitcoin is that people forget that Bitcoin is a social network as much as it is a technology, as much as it is a commodity, as much as it is a system. That's the thing. I think many people focus on one or two aspects of what Bitcoin is, when the best, most robust understanding, in my view, comes from understanding it as a whole. And the misconception about Bitcoin is lack of perception about Bitcoin, I guess you can say, in my view.
Okay. Well, as we wrap here, I just wanted to ask you one more thing to close. There are Bitcoin maximalists, there are sound money advocates, there are skeptics, finance nerds, and everyone in between. When you look back at your own Bitcoin journey and the contributions you've made and those that will come, how do you hope your friends, your family, or even future generations will remember your role in the Bitcoin story?
As someone that was original, authentic, a free thinker, a thought leader, and not a sellout. If I had to put it into bullet points, that'll be the best way that I can think about it. And my approach sometimes, rubs people the wrong way. I really don't care when push comes to shove. So I think that that'll be the best way that I would hope to be remembered. People give. I've been kind of learning this lesson and going along this journey that people are giving my words a lot more weight, which has made me more measured in some ways, but also more willing to cause controversy in others. So that if I had a ideal state, I think that would be it. That people remember me like that, and hopefully I can orange pill some of these people along the way. That would be great. If people said at some point, "Yeah, you're the one that orange pilled me," I think that would be cool. Because I really do think that Bitcoin is going to be a transformative force in people's lives, and I would love for as many people as possible to come along that ride.
Well, Adrian, I think we're just getting started here. I've enjoyed the work that you've put out, and have seen a lot of the success that you've had, and it's very very admirable. So keep on going and doing what you're doing. As you say, stay authentic, stay true to yourself, and it's going to be fun to look back in a couple of years and continue to see how far things have come. So, and thanks for your
I
time
think
today.
you should as well, because you're newer in the space and you're going to experience a lot of headaches. And the advice I can give you directly is keep doing what you're doing as well. You should not allow people to dissuade you from what it is you want to do, no matter what negative feedback you may get. So, that goes both ways. So I appreciate you having me on, but I want to make sure that I extend to you that I think that you have a bright future ahead of you and should absolutely keep doing what you're doing right now. Absolutely.
Appreciate it. All right, Adrian. Well, thank you for your time again and had a blast having you on.
Thank you for having me on. This was a great conversation. I'm happy to do it again anytime.
Perfect. All right. Take care.
Later.